Medanta has recorded a 35% increase in its revenues this quarter, while its EBITDA margins came in strong at 23.6%. Its net profit jumped 4.8 per times over the same quarter last year. So what has aided this strong growth in performance?
Thank you, Monal. We are very pleased with the financial performance that we've been able to deliver throughout the course of financial year 23 and indeed over the course of the last quarter and the last several months. Much of this growth has been delivered by our sustained philosophy of really delivering the highest quality, highest end care, and making sure that we are one of the most preferred destinations for high quality clinical talent. So if you look at the last 1 year, we've been able to add over 150 doctors, many senior, well-respected, well-established clinicians coming into our facilities, and that's across units in Gurgaon, Lucknow, Patna. So one of the main reasons has, of course, been our doctor additions. We've also added in about 200 beds, or 300 beds actually, across the ecosystem. We've seen our Lucknow units grow. We're at about 600 beds in Lucknow as at 31st of March, over 200 of which are critical care beds. We've added in beds in Patna. We've added in operating theaters, over 75 operating theaters across the right now. So a lot of the growth coming in from really being able to deliver high-end, high-complexity care and being able to do that across the units where we operate. We see our Lucknow unit performing very well. Our Patna unit, which opened in January 2022 in terms of its inpatient facilities, once again being our third unit in terms of our greenfield that was able to deliver EBITDA breakeven in its first full year of operations. So really performing well there, being able to deliver a very strong EBITDA performance in year 20, being just about 1 year old. And the other important part, if you look at our overall group EBITDA of about 677 crores for the financial year 23, almost 95% of that getting translated into cash. So very strong EBITDA to cash flow conversion of 95%. We've been able to pay off our loans, which we had as well after the year end. So when you look at our net cash position as at 31st March, over 470 crores of cash, that's after taking out all the... So very strong balance, very strong months, and really setting us up well the growth that we see coming in the following months.
So in terms of occupancy as well, do you see that inching northwards? I mean, considering that you're adding new beds, is there a plan that will keep us at 60% levels, or we might see a slight dip?
Our volumes are moving. So you will notice that our volumes, inpatient volumes have increased almost 30% year on year. You will find that our outpatient volumes have also increased. So a lot of the actual growth we assess on absolute terms in terms of volumes, and occupancy tends to be a little bit of a misleading metric because of the fact that we continue to add beds on an almost monthly basis in a regular manner. The other very important point to note is that we've been working on this now for several years, is that our average length of stay has fallen continuously almost every quarter. In fact, if you look at our average length of stay from FY22 to FY23, you'll see a significant drop in that average length of stay. And this is beneficial for patients as well as for the hospitals. We'd like to get our patients home as soon as possible. So our thoughts on how we think about occupancy, how we think about volumes, are really also mixed in with how we see the growth moving forward. We do expect these numbers to improve as we stabilize our bed growth, but it's a little bit of a moving target over the course of the next several quarters and years. As we add in bed capacity, we will see certain metrics change. But the interesting thing to note is that we've been showing good stability despite the denominators increasing in terms of the bed addition. And when you look at the absolute volumes, you see fairly significant growth on those accounts.
So also, I'm going to come back to my point on the expansion plan. So, when we had the IPO coming in, we'd had a small discussion that you all had evaluated certain opportunities in the West, I think, in Mumbai, in and around Mumbai. So any plans of, moving to the West and the South, and just a tie-up or any sort of budget that has been planned, set aside?
Why not? I understand that there is a lot of excitement in many of the states and many of the places that we visited. A lot of the people were always asking us, when are you building a Medanta in our state? So we're fortunate that there is a strong demand, a strong recognition of the brand Medanta and the quality of care that we deliver across the country. As you're aware, there are multiple discussions that we have on a continuous basis, not only in the western part of the country, but in other areas as well. Our focus as we think about our expansion is to make sure that these are deliberate and definitive steps rather than rushing into anything just for the sake of ticking off the boxes. So our approach has very much been to make sure that whenever we go into any community, we can go in with the right ethics, the right value system that Medanta delivers, the Medanta model of care that we can deliver in terms of high quality, high complexity care. We have absolutely evaluated the western part of the country, and we do feel that there are strong opportunities there, as with other parts, continuing in our growth in the central part of the country. We already have Indore coming up there in terms of a 300+ bed hospital. We've also evaluated other cities and other states in that part of the region, as well as looking at the north. I mean, India is a huge country, huge areas in terms of high quality care. So we continue to look at all opportunities very aggressively, both organic as well as inorganic, as well as O&M and effective partnerships in terms of asset-light models. And we are in discussions with several parties on various approaches. But obviously, it would be appropriate only to share those with you when we have definitive discussions or definitive agreements that we have signed off on.
So even for Indore, I mean, we've achieved a Patna breakeven in its first year itself. So are we hoping to replicate something like that for Indore as well? Do you expect it to be on similar lines?
Well, normally a hospital, especially a big hospital, the kind of size that Medanta makes, 400, 500, or even 1,000 beds, normally you would find these hospitals would take a minimum of 3 to 4 years to achieve EBITDA breakeven. I think Medanta has up that trend a little bit, whether it's our original flagship in Gurgaon, which we started in late 2009, early 2010, or our Lucknow facility, which we started out just as COVID was coming on our shores, or indeed our Patna facility over the course of the last year. We've been able to show that almost all of these facilities, we've been able to deliver a strong financial performance and EBITDA break-even over the course of just about a year or so. I do want to caution to say that that is not a normal course of progress that you should assume in the industry. We've been delivered exceptionally well in all of these units. And that's really off the back of the quality of clinical talent that we have, of the caliber of the work that we do. We've always believed that if you focus in on delivering the right kind of high quality, high complexity, and high ethics medicine, then the financial numbers will deliver the returns that they're supposed to. So our focus remains on that. We're not chasing EBITDA break-even in 1 year or 18 months. But yes, we have been able to deliver on that, and we feel fortunate that our teams have supported us in terms of the work that they do.
And so one question around your ARPOB as well. It's now 60,000 in Q4. So from those levels, do you expect it to remain around those levels, or could you guide us with, how is it expected to take shape now?
When you look at our ARPOBs, it's important to understand that we operate across a variety of geographies. So starting with the facilities in Gurgaon, which actually have slightly higher ARPOBs than you will see on the consolidated reported numbers, to our facilities in Lucknow and Patna, both of which have delivered, I would argue, higher ARPOBs than many people expected. So we do have a blended ARPOB that gets reflected at the consolidated level just because we operate in a very wide variety of geographies. And we've actually been able to show that even in what some would call the tier 2 or the tier 3 geographies, performance has been able to be very strong. Once again, ARPOB as such is not a metric which we chase or a metric which we worry about too much. It's more of an outcome of the complexity of the work that we do. So despite the fact that we do not have the highest tariffs in town, we've been able to deliver strong ARPOBs, and that's really of the complex critical care, high procedure orientation nature of work that we do. And that allows us to deliver strong RPOPs and strong metrics. As we move forward, we see no reason why this will change. We do believe that we will continue to focus on high complexity care. In fact, we're adding on more and more complex care. So if you look, for example, at some of the work we've been able to do in the group in terms of adding on things like lung transplantation, kidney transplantation, liver transplantation, other complex procedures, robotic surgeries, etc. A lot of this clinical work is operating at the high end and high complexity. And that translates then, of course, to our POPs and higher ARPPs in terms of the performance that we have. So we are feeling fairly confident around this, but also important to realize that this is spread across different geographies. So when you get into the analysis of this, how we think our POPs or ARPPs, actually more importantly, across geographies becomes very important.
Sure, sir. And so my last question will be around Medanta labs that you have. What sort of response are you seeing there? And again, with diagnostics being the kind of competitive space that it is, what sort of growth are you envisaging there? Are you expanding on that front, or is it going to continue to remain the kind of portion in the mix of revenue that it is currently, or is it planning to get bigger?
Over the course of the last year or so, we've launched both our lab services outside of our hospitals as well as our outpatient pharmacy services, yes, and even launched in some home care services. A lot of the focus and the reason for launching in these services has really been the demand from our patients to say, can you help service us outside the hospital as well? Can you deliver care closer to our homes? So it's been a response really to the strong demand of our patients and a testimony to the quality and the brand that Medanta carries in terms of the care that it delivers. And this is really one of the main reasons that we have ventured into these areas. So we continue to focus on making sure that we deliver continuity of care, making sure that we are delivering this care to patients as close to their homes as possible, and looking and seeing how we expand out into these areas. Once again, very deliberate steps being taken. So we are not in a hurry, just kind of show volume numbers for the sake of showing volume numbers. Our focus has been and remains definitive, determined steps to make sure that we are servicing our patient populations, delivering the care that we believe is the right way to deliver care. And yes, we do anticipate this to grow. We do anticipate this to scale up in the months and years ahead. But doing it in the right manner, doing it in a deliberate manner, whether it is our home care services or our lab services. So we will not be chasing highly discounted, aggressive customer acquisition rates, etc., that you see in the industry, but definitive, deliberate steps to make sure we serve our patients wherever they are.
Thank you so much, sir, and all the best.
Thank you so much.
Thank you so much for tuning in today.